Friday, January 18th, I promise. There's not a lot going on in markets. We are in a polite rebound from the worst of the fright in December. The Dow Jones average, I had to look it up this morning to be sure, it's up 2,000 points since the 3rd of January. Of course, it was down 4, so you count thy rosebuds while ye may. And long-term interest rates are rising, but not much. The 10-year T-note is, from the 250s up to 280, but it's a short 3 months ago that we were sitting at 325. Mortgage rates are still safely in the 4s. We were above 5. So peace. But there are, this week, some lessons about what markets care about and what they don't care about. And markets have an odd frame of mind about things to care about. And the most interesting one, in the last few days, there's a new rumor that we will reach trade peace with China. It's just a rumor. The White House has made no announcement. And the stock market's had a very good week, and rates have risen on the optimism that that foolishness is going to stop. The market doesn't care about what the terms of a stop to the trade fight. They don't care. Just stop. It would be nice if China would stop its intellectual thievery. It would be nice if China would drop some of its non-tariff trade barriers to American exports to China. But all markets care about is just stop, which might be a signal to the political front, but you can't ask for too much. The things that the market does not care about, Brexit. The UK had a tough week. Market doesn't care, partly because it's too soon to care. If the United Kingdom and the European Union do not know what they are doing, then why should anyone else and why should we care? Nothing happened. All the political gyrations this week between the President and the House and new accusations against Trump just overnight, market doesn't care. Why should the market care? What difference would it make if it's President Pence? What policies are going to change? It's an interesting attitude to be quite so detached and relaxed about things that ordinary civilians care so much about. Meanwhile, big signal from the Fed. Every Fed speaker in the last 10 days, and there have been about one a day, has taken great pains to say pause, patience, careful, stop that. The Fed is clearly not going to tighten soon, as in March, which would be 90 days from the last one, until it has some reason to do so. The translation is data dependent, which is demented. The Fed's always data dependent. And within the group of Fed speakers all saying pause, 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 are the hawks. That is, the Fed people who, left unattended, think the right thing to do is to raise rates tomorrow just for the hell of it. They see inflation under every shrub and rock on the path. And all of them are out also saying pause, be careful, be cautious. That's a big help. One of them, the president of the Kansas City Fed, which is the most conservative of all of the 12 Fed regional banks, said that we are close to our destination. Destination? Fed jargon, since the beginning of time, has, as the Fed tightens, everyone is thinking we want to achieve a soft landing. We don't want to overdo it. We want to just land. The Fed's been around since 1913 and has achieved one soft landing in that time, roughly 1995 to 1999, an event so rare that it looks more and more like an accident all the time rather than something accomplished with skill. So in the newsletter next to this video is a chart of Fed coming and goings, tightening and easings, and in particular the dates of the last several on end of tightening cycle and what happened next. And the lesson is that if the Fed's headed for a destination, you're going to be there long enough to have a cup of coffee and then you're going to move on. The Fed rarely has as much as any more than a year from the moment at which it stops to having to begin to cut. I doubt that the Fed is tight enough now that its next move will be to cut, unless something ugly happens, which can always happen. It's more likely that the Fed has actually succeeded in some sort of normal, and it will take something substantial in the way of a slowdown to actually produce cuts. But the history of Fed destinations is that they're very short, and then we go down again. On that note, wishful thinking, maybe, but I'll take it. Good weekend.